Canadian bank earnings. And we were in the midst of getting our Canadian bank earnings. We've already had a few banks report. We've had TD Bank, for example, report, I guess it was last week. They were the first, kind of unusual. They usually report all together, but TD Bank actually went a week ahead, or almost a week ahead of the rest of the banks, Scotiabank, BMO, these banks reporting. We're going to get a few more banks at the end of the week. But overall, it looks like, I guess without the last couple of banks reporting as yet, it looks like we're starting to see a pattern here. We're starting to see, good capital markets. We're starting to see good, I guess, fixed income markets. We're starting to see trading, wealth management. These are all positives. We've seen, TD Bank reported positives in that area. Scotiabank reported positives in that area. Scotiabank reported some good numbers internationally. And we know Scotiabank is the largest or is the most international bank that we have out of the big five Canadian banks. And so seeing or getting numbers that out of Scotia that tell us that things are going really well, not only inside of Canada, but internationally, bodes really well for the stock. And yet the stock price, unfortunately, has not moved higher. Paying a great dividend, 6.5% dividend, Scotiabank. For those looking for good income right now, Scotiabank definitely fits the bill. TD Bank, because of their recent issues on the money laundering issues, the compliance issues that they're facing in the US, their stock is now paying in that 5.5% dividend range as well. And some of the other banks are also paying over 5%, CIBC, Bank of Montreal over 4%, Royal Bank just under 4%. So most of the major banks are paying what I would consider pretty good dividend yields. So I think good buying opportunities, and their earnings are showing us, or at least telling us, that things are pretty good right now. On the negative side, banks are setting aside more money for bad debts. They're setting aside more money for defaults. What does that tell me, and what should that tell all of you watching today? Well, that should tell you that banks are thinking that things are slowing, that people are racking up their credit card bills. They're spending more than they make. They're spending beyond their means. I've said this on the show a few times. Right now in Canada, you're spending, or the average person is spending about $1.80 for every dollar that they bring in. That's just unbelievable to think of. And not too long ago, it was $1.60, and prior to that, $1.40. We seem to be going in the wrong direction here in Canada, not bringing those expenses or costs down. The first chart I have here actually is something interesting I wanted to start off with, and it is actually a comparison between US and Canadian banks. And we can pull that chart up here. There it is. And because everybody always asks me, Alan, what about the Canadian banks? And some people will say, well, in comparison, how are the US banks doing? So this is a good chart. This kind of shows you how things have fared. And on the left side, Canadian banks, an ETF, and on the right side, a US bank ETF. And for the most part, they've gone from the bottom left to the top right. I would say that Canadian banks have kind of leveled off a little bit. They went straight up as of November 1st last year, and then leveled off and have had a bit of some peaks and valleys over the past few months, but kind of staying in the same area. On the US side, they've also gone up nicely, a nice slope from the bottom left to the top right, again, starting in November, and a dip in April, and then back up again in May. And now we're seeing a bit of a dip towards the end of May. And we're seeing that bank stocks in the US have come down a little bit. Dow Jones has come off a little bit, some of their high points as well. So, but both charts are showing you that Canadian and US banks have been on a pretty good run since the fall of last year. Canadian banks pay bigger dividends than US banks on average. US banks pay, 2-3%, whereas Canadian banks are paying, as I said earlier, they could pay the highest bank right now, or the biggest dividend from the five major banks, is 6.5% from Scotiabank. Wanted to show another chart here. We've seen this before, TD Bank chart. They reported, as I said, I believe it was last week on the 23rd. You can see their stock price has definitely been falling, and that is due to the money laundering investigation that is going on at TD Bank. For those of you that don't know what that is, TD Bank was accused of money laundering, some drug money, from fentanyl sales out of China. and there was talk that there were some TD Bank employees that were actually bribed to take this money on. Obviously, we don't know if that's true or not. The investigation is ongoing, but as soon as the word came out that the investigation was happening, stock of TD Bank fell substantially. Well, actually, I shouldn't say that. It fell maybe 10% or so, 5-10%. An opportunity to get into the second largest bank in our country at a pretty cheap price if you can handle the risk and volatility that is going on right now. And as I said, TD Bank yielding about 5.5%. And I thought that had a pretty good earnings release when they released earnings. Another bank stock that we have here that I've mentioned already, Scotiabank, Bank of Nova Scotia. You can see here that their stock has been pretty good. It was on an upward trend, came down towards, let's say, mid to end of April, and now it's gone back up once again in May. So bank stocks, in my opinion, so far have reported pretty good quarterly earnings. We'll see what the last couple of banks report at the end of this week. I believe Royal Bank goes, CIBC, and but so far, I think these are good quality earnings. And as I said, stock price hasn't really reflected that as yet. So if you're looking for a pretty good growth and income generating investment, I think you can look at our Canadian bank sector.